Welcome to the Capital News. I'm your host, Alex Caraitis. Today is Sunday, January 3rd, 2021. Thank you so much for joining me, and Happy New Year. Hope you all enjoyed your long holiday weekend with friends and family, if possible. Title of today's podcast is 2021, and so, and so it begins. But first, before we get started with what I want to talk about today, I want to wish my Papou, my grandfather, a very happy birthday. It's a little bit belated, but of course I spoke with him and was able to see him. He's a New Year's Day baby. So a couple days ago, we celebrated that with him. 91 years old. Can you believe it? He can't believe it because I asked him, did you think you'd ever make it this long? And he said no. But we're so glad that he has. But can you imagine what has taken place since 1930 to where we are today in 2021? And can you imagine what will take place, what will transpire 91 years from now? I mean, I just want to go over a few things. I'm going to miss a gazillion and one items and things that took place over the past 91 years. But born in 1930, the Great Depression. That in and of itself is something that is likely to remain with somebody throughout their lifetime. See, I lived through the Great Depression. Well, that wasn't it. Much, much more through the 20th century and where we are today. So you start with the Great Depression. Then you have World War I. Then you start to have the rise of the Soviet Union. Then you have the Korean War, which he served in as a United States Marine. Obviously, nuclear weapons. Vietnam, the Vietnam War. The assassination of a president of the United States, John F. Kennedy. His brother several years later, Robert Kennedy. Dr. King assassinated. The Civil Rights Movement. Putting a man on the moon. The space race. All of those technologies. It's crazy. It's crazy. Inflation, stagflation, 1970s, 1980s. The collapse of the Soviet Union, the tumbling and crumbling of the Berlin Wall. The wars in the Middle East, 9/11, and everything that's been going on through 2020. Like I said, I missed a gazillion and one things, but those are some of the headlines through the past 90 years that will have forever changed the course of history. And so, you go from picking up the phone and an operator connecting you to somebody else to having what we call a phone in our pockets, but the least of what we do on the phone is actually talk to other people. At least as a telephone. There's a lot of texting, obviously. So where will we be in another 91 years? What will have taken place from now until 91 years from now? It's something to think about. But happy birthday, Papou. We love you more than you'll ever know. So some market performance. Initial jobless claims data, which came out last Thursday. Of course, that was New Year's Eve. So we'll get to that. A brief discussion with the Federal Reserve's balance sheet and M1, M2, as we always do on a typical Thursday, but reserving that for today. And then just some stuff that's likely to take place this week. And then some other charts and graphs, some interesting data that I thought was interesting that I want to share with you guys too. And we will wrap it up. But first, to market performance. We have the dollar index trading at 89.7. 89.7. Currently down about 0.25%. A lot of broad-based dollar weakness here. So we have the euro against the dollar gaining 0.33%, trading at $1.22.5. The British pound to the U.S. dollar is roughly at $1.37. So really making a strong move to the upside there. We have the dollar against the Swiss franc down about 0.1%. What's another big move here? The Mexican peso I'm not concerned about not being a major. And Bitcoin continues its meteoric rise, 33,372 points. 33,000. So you can think what you will of Bitcoin, but it is going, well, it is up. Let's just put it that way. Where it's going from here is anybody's guess. It's not something that I believe in, but what I believe in doesn't make a difference. This thing could, of course, make new all-time highs, which it's been doing, or it could collapse. Time will tell, and we'll monitor. Overnight futures trading at the Dow Jones Industrial Average is flat. The S&P 500 is currently up about 0.1%, as is the NASDAQ 100. Cash trade in Japan is down 0.5%. Nice rally today in the Australian markets during the cash trade, up 1.33%. On the commodity front, WTI is trading at $49 a barrel. Brent is at $52.33. Natural gas is at $2.63. Gold and silver both higher. Gold is up 1.33%, trading at $1,923 an ounce. Silver is up 2.23%, $27.06. Now, you know, a lot of times we see a strong overnight market Sunday evening for precious metals, and then not so great in the day trade during Monday. So we'll continue to monitor this. Clearly, I'm happy to see precious metals starting to make these types of moves. If they can be sustained, then I think we are going higher. I mean, throughout this decade, I think this is going to be a precious metals and commodities decade. This is a bull market for precious metals and commodities for this decade as far as I'm concerned. Because this decade, I believe, is going to be focused more or less on survival. And I mean that. And it's going to be based off of the necessities. What do you need to live? What do you need to function? You need food. You want to keep the lights on. You need utilities. We're going to have currencies collapsing. We're going to have governments collapsing. So that's gold and silver. And this is the real stuff. Plus, with everything that the central banks and the governments have been doing, it's all inflationary. It's going to find its way into these markets. So that's where you want to be if you want to preserve what you have and perhaps and hopefully grow it. And grow it on a real basis. And doing so by holding physical gold and silver, the mining stocks, not just for the precious metals, but for other metals and minerals, and agricultural products as well. It's about real stuff. I have been stating this here for months with respect to how they calculate inflation. I said, I am not concerned with the items, with the goods and services that people are not buying. I am concerned with what people need. And those prices have been going up. But the government is going to calculate everything. It all gets calculated in that mix. And so that's going to suppress the real effects of this inflation. So it just comes down to a government report. It comes down to their news release, what they claim the inflation rate is. But you have to look at reality. You have to understand it. And when you have structural unemployment, massive unemployment, and massive underemployment, you got people in food lines, you know something's amiss here. You understand why I say this is structural. Not a flip of the switch. You're not just going to undo all of this because you say, oh, okay, everybody can go back to work. It's not going to work that way. And we're already having more discussions of further lockdowns. Japan is bringing it up. The UK and other European nations are bringing up further restrictions, further lockdowns, because of this new strain that's supposedly more contagious. The timing is it's perfect. This is a very smart virus. How did they know? As soon as we got a rushed vaccine to market, it knew to switch its composition. Well, they want to have a vaccine? Well, we'll see what we can do about this. We're going to become a little bit more contagious. It's always going to be on to the next thing. It's going to be the same song and dance. I mean, we have some extensions, right, with the Nobody Cares Act 2.0 through the first quarter. It's going to be the same stuff that we saw last year. The traveling due to Christmas and New Year's. Oh, well, people were traveling. We told them not to do it, but they did it. And now the caseloads, everything's going back up. Got to restrict, got to lock down again. And then before you know it, we're going to be in March. And spring break is going to be here again, like it was last year. And all those college students who didn't stay at home, they went out, and then boom, you saw big caseloads increase again, especially in Florida. Oh yeah, come to Florida. We're not locking down, no restrictions. And then boom, all of a sudden, surprise, surprise, cases went up. That's going to be the same thing that happens again. So this is going to hurt the travel industry because some states and some major cities are going to say, look, we understand that we're typically a major attraction for spring break goers, but we're not going to do it again. So there goes your conventions, there goes your hotels, there goes your resorts, and everything else that they spend money on. This is far from over. This is why I am saying that 2021, economically speaking, is likely going to be worse than last year. We haven't solved anything, and they continue to push this narrative. Well, there's a more dangerous, a more contagious strain that is out there. And a lot of people are just going to line up and just go with the flow, and what else can they do? But we might find out what they do when people have no other options. And I think that could be a breaking point this year, too. On the bond front, to round it out, we have Uncle Sam's 10-year junk note yielding 0.95%. So that's some of the market performance. Pay attention to precious metals and commodities. I suggest you look into them to preserve your wealth and to hopefully expand upon it. Initial jobless claims. For the week ending December 26th, 787,000. This was better than expected. Market expectations were north of 800,000 because we have been north of 800,000 for the past few weeks. But again, for the week ending December 26th, 787,000. This is still a heartbreaking figure and still much higher than where we were during the depths of the great financial crisis. So still very much so in the wrong direction. And of course, for the week ending December 19th, that figure was revised upward by a few thousand, taking us to 806,000. For continuing jobless claims for the week ending December 19th, recall that this figure lags a week, 5,219,000. This is a decrease from the prior week of 103,000. Adding it all up, all benefit programs, regular state, federal employees, newly discharged veterans, pandemic unemployment assistance, pandemic emergency, UC, extended benefits, in state additional benefits, and a work-share program, we get a grand total of 19.5 million. This will be for the week ending December 12th. This lags by a couple weeks, recall. So that is a week-over-week difference, however, of a minus 800,000. So that's where we want to be, right? That's the direction we want to go. And hopefully that means that's because people are getting back to work. But is it? We have all of these distortionary policies in place. We're now extending Nobody Cares Act to Nobody Cares Act 2.0 because the biggest change here with respect to the grand total was in PUA. Down 811,000. The biggest gain was in extended benefits, gaining 89, almost 90,000. Now, those have been extended. The PUA, PEUC, we talked about that last week through the first quarter of this year. That $300 a week. But I really want to know where this number, where these people, because these figures match up to individuals here. With respect to PUA, week-over-week change of 800,000. to the good side. Did these people get work? Did they go back to work? Did they extinguish? Did they exhaust, I should say? Did they exhaust their benefits? Because that was my concern all the way back in March of last year when they passed this thing. I said, this is distortionary. We're never going to get a true picture of the jobs market with this stuff in our way. And that's why we have to look here and there and back here and back over there and all over the place to paint the picture. What makes sense? What's in the same direction? And then what's at odds with itself or with some other piece of data? Makes it tricky. Because once these programs, once they expire, well, that's it. Nobody's on them any longer because they don't exist anymore. So you can have a grand total of 20 million and then boom, a policy expires, a program goes away. Well, then you can't count them anymore because they're not there. Yet they're still alive. They're still trying to find work. They're still trying to pay their bills, still trying to take care of their families. So it's just another effort by our government to kick the can down the road. And some further data that we're going to look at, some charts and graphs I wanted to talk about. We're going to see how much money the government has handed out to people. It's amazing. Modern monetary theory, UBI, universal basic income, it's coming. That's what they are pushing. You just got to break everybody's spirit. You got to break their willpower. Got to make them desperate. And then once people are desperate, well, now they'll look the other way. They'll sacrifice their principles. Now I need help. No, it's got to go from the government. Got to get it from the government. They got to take care of everybody. That's what's coming. We can't afford it. Let's see what else I want to talk about here. So that's jobless claims, 19.5 million grand total. So that still takes us to roughly 13 and some odd percent. If you were just to look at the unemployment rate from that perspective. Of course, this Thursday we'll get initial jobless claims released again, and then this being the first Friday of the month will be the official jobs report, so we'll have that for you on Friday. And one money stock, actually a little bit lower than where it was last week, but again, last week was an all-time high. Same situation for M2 money stock and for the Federal Reserve's balance sheet. Nothing drastic on any front. Like I said last week, they all made all-time highs, so a little bit of a pullback is not a surprise. Even when you're talking 30, 40 billion declines, it barely registers on these graphs. It's barely a blip, because when you have a Federal Reserve balance sheet at roughly $7.4 trillion, 40 billion is nothing. That's like a penny falling out of your pocket. You're not going to waste your time to pick it up. And just wait to where we find ourselves at the end of this year with respect to the Federal Reserve's balance sheet. I imagine we'll be close to $10 trillion, maybe even more. So some of that other quick data I want to get to that I stumbled across past couple days and wanted to share with you guys. This is from Refinitiv data. Headline here of this graph is Tesla dominated 2020 in Wall Street trading. Over 6 cents, 6 pennies of every dollar traded on Wall Street in 2020 was on Tesla. Tesla. Actually, according to this chart, 6.6%. Next in line is Apple at 5%, so 5 cents. Amazon at 4.5%. Microsoft 2.4%. Facebook 1.8%. Boeing 1.7%. Nvidia 1.6%. Alibaba 1.5%. Advanced Micro Devices 1.3%. Netflix at 1%, and Alphabet, the parent company of Google, is also at 1%. Is that something or what? That's like 11 companies, 11 stocks. And when you tally all those pennies up, when you tally up all those percentages up, they're like 28.5%, somewhere around there. S&P 500, 500 companies. The Russell 2000. Nope. Just 11 companies make the difference. This is outrageous, and I've been saying it here for months. What leads up leads down. Once investors bail on these companies, because how much more can they make from them? How much higher are they going to go? Now, you keep the printing press going, you keep them buddy-buddy to the government, which they pretty much all are. They're basically another department within the government, these companies, with all the tax breaks they get, with all the government contracts that they're awarded. 28.5% on 11 companies. This is not a market, ladies and gentlemen. 11 companies does not constitute a market. This is outrageous. But I wanted to share that just so you understand this. Here's another one. This graph is titled The Main Street Inequality. The Main Street Inequality of 2020. This data is out of Bank of America and Haver Analytics. And it says, note, just so you have the fine print as well, private sector financial assets includes currencies, deposits, equity shares, and other securities, and does not include real estate. But what we're looking at here is U.S. private sector financial assets as a percentage of GDP. All right? U.S. private sector financial assets as a percentage of U.S. GDP. This data goes back to 1950. You have a range from 1950 to about 1995 where this figure does not exceed 3.5 times GDP. During the dot-com boom, about 4.5%. During the Great Financial Crisis, or before the Great Financial Crisis, the lead up to it, we're at about 5%. Now we were at 4.5 times GDP. Great Financial Crisis, financial assets were 5 times U.S. GDP. Now we are at 6.3 times U.S. GDP. And again, if you look at this graph, it's another vertical line. Another vertical chart, like the Federal Reserve's balance sheet, like M1 money stock, like M2 money stock. These charts are straight up. You don't have to be an economist or mathematician to understand that this is wrong, that something is amiss, that this is not sustainable. U.S. private sector financial assets as a percent of GDP, against U.S. GDP. 6.3 times. Talk about inequality. This is what happens when you turn the printing press on. Yet they tell you otherwise. And then here you have, this is out of the Bureau of Economic Analysis, a division of the Commerce Department, the percentage of personal income made up by government transfer and assistance payments. So this is what the government is sending out to people. This is their income. All right? This data goes back to 1961. We're at about 6 to 7% of people's income coming from the government. During the Great Financial Crisis, let's round up, let's make it 19%. Where were we in April of 2020? 31%. And now we are back down to 19.1%, still slightly above where we were than during the depths of the Great Financial Crisis. Nearly a third of all people's incomes came from the U.S. government back in the month of April. Now we're at 19% where it stands now. And with the passage of Nobody Cares Act 2.0, I imagine this figure is going to go up again. Now, I talked about this a little bit last week, I believe it was, with respect to the quote-unquote Great Reset. This is not a conspiracy theory. This is in the mainstream. In fact, I was on my Twitter feed the other day, scrolling through, and Time Magazine, their Twitter account, noted in their headline, the Great Reset. This is here. It's in front of you. The question is, what do they mean by it really? Really, reading between the lines. What do they really want? How frustrated, how desperate do they want people to feel? where they just throw their hands up and say, okay, I can't take care of myself anymore. Mommy, daddy, government, please take care of me. If their goal is to implement modern monetary theory and implement universal basic income, well, we were almost there. Back in April, we're about a third of the way there. And if things get worse, it could very much go higher than that. And you have some type of new normal. And there's not going to be anything normal about it if that's what happens. And I think you recall, who was it? Andrew Yang, right? Presidential candidate on the Democratic ticket. I think he's now throwing his hat into the ring to become the mayor of New York City, and is, of course, continuing with his policy or his campaign pledge to implement universal basic income. And it's kind of ironic that a man who has a math pin, M-A-T-H, wears a math pin. You know, like a lot of politicians and people wear the U.S. flag. He wears a math pin. That somebody who wears a math pin could somehow be an advocate for universal basic income. Where does the money come from, Mr. Yang? Taxes. Oh, yes, it comes from taxes. How about you just not tax people then? Why don't you just let them keep all of their income? How about that? Why create a middleman to take all this money just to give it back to them? How does that make any sense? It doesn't. It doesn't. And we're already seeing an exodus from a lot of these high-tax states. Corporations, wealthy individuals, leaving California, leaving New York, going to Texas, going to Florida. And the thing that of it all was obviously they're taking their political beliefs with them. So a lot of these liberals who have done well for themselves are now going to states that are traditionally red or Republican or conservative. And now you're going to have almost a complete redo of the Electoral College map. States that are typically red might turn blue because a lot of people from blue states are going to red states. But who knows? We'll see who remains in some of those blue states where the exodus is taking place. It's going to be different, and I think it's going to throw a lot of people for a loop over the next couple of presidential cycles until we sort of find our new groove here in seeing what's taking place. And that's the other ironic thing, too. All of these people are, especially the liberal-minded, leaving these states due to high taxes that they voted for, and they're leaving and say, well, they can't figure it out. They can't connect the dots. That they themselves are to blame for those policies because that's what they voted for. And they're going to take those same ideas to the other states they go for, and they're going to be voting for that. And then they're probably going to scratch their heads in another 10, 20 years. Oh, what's going on here? Everything's just following me. Why are taxes going up? Why are costs going up? Because that's what you voted for. It's ridiculous. And everybody's broke, too, so figure that one out, too. All right. What else do I have? That's pretty much it. More lockdowns, potentially, especially in Europe, maybe in Japan again. Ah, yes. This week, supposedly, this is more of the circus stuff. So if you're interested in following the circus, this Wednesday, right? I believe it's Wednesday, January 6th, supposed to be a huge march on Washington. I guess to protest or contest the Electoral College vote. I mean, that's what Thunder Thumb says. It's going to be, a huge march here. He's going to be there. It's going to be fantastic, whatever it is. I'm sure I will pay a little bit of attention to this just to see what's going on. I'm just mentioning it because if you like to focus on the circus, this Wednesday, supposedly, a huge march on Washington to contest these results. Now, if, for the sake of argument, somehow, some way, the election gets overturned, do you think this is just going to be peaceful? So you better be careful what you wish for if you're still clinging to hope that Donald Trump remains the president of the United States. You just think that all of those people who voted for Joe Biden and all those liberals who cannot stand Donald Trump, you think they're just going to go away quietly? So you better be careful for what you wish for, is all I'm saying. So that's more of the circus. Anything breaks from that, I'll, of course, discuss it. But more or less, it's just clowns and monkeys as far as I'm concerned. Pay attention to gold and silver and commodities. Please, this is just getting started. Just getting started. Any type of pullback, as far as I'm concerned, is a buying opportunity if you can do it, but do your own research. I tell you what I do, you got to make up your own minds. So that's it. 2021, and so it begins. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Curritis. Godspeed.